Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, February 18th, 2010. Well, folks, the markets again are just kind of slowly inching up. We just got a little bit of a pop, the biggest pop of the day in the markets here, as we are continuing to inch up into the 111 area. Now, it's interesting because the key level that you're coming into now is actually on the daily chart, the 50 moving average. I'll briefly show you that, but I really can't go into more detail than that. But here you have it. See this little purple trend line right here? That's the 50 moving average on the daily chart. In addition, what you can see here is you've stalled all day underneath the 200 moving average on the 60-minute chart and have now broken up. And again, the level that you're looking for now in the markets to hit that 50 moving average on the daily chart is the 110.90 to 111 area. That is the key level to watch, folks. Keep an eye on it. It is the level that you will be looking for a possibility of this market to continue to pull back or start to pull back at that point. Keep a close eye on it. Now, a couple other things to go over, folks, as we continue to scan through this market. The markets continue, again, as I said, to just kind of inch up. Ever since the big rally on Tuesday, we've kind of had these flattish to slightly higher days. Yesterday, very much sideways. Today, very much sideways until this little bit of a pop here. And again, what you have to do is you have to turn your attention to the UUP. The dollar chart is really where it's at here. And you can see, notice here on the chart how you've started to move up over the last hour, right? So you'll see the market, how it was down here, hovering just off the lows, and then you started to inch up just a little bit, like that, right up there with a big pop here. Well, now take a look at the UUP chart. Look what happened over the last hour or so. Notice the dollar coming in spirit of bear flag, but nonetheless, over the last hour or so, that fall in the dollar is helping push the markets up. All right, and again, that's what we're seeing here and what we're continuing to see here in the markets across the board. A couple other things to go over here, folks. All right, couple other things to note. We have to look at the market on tap for Goldman Sachs. Goldman Sachs has been under pressure here quite a bit for the last, multi-week period. And then all of a sudden, again, with the market rallying the last few days, it got a little bit of a pop and then kind of stalled out again. And Goldman Sachs continues to be very, very weak. Have to continue to watch that, folks, as Goldman Sachs could be in order for a little bit of a catch-up move here in the afternoon session. Notice how the buy program on the markets has really surged to the upside here, okay? So a couple different things right there. Next up, let's go to ExxonMobil. Now, ExxonMobil has also had a surge. Notice how Exxon's leading the charge to the upside. Again, you can take a look at oil, the USO today. The USO is up 61 cents. That's a nice move on the USO. And again, USO is getting a little short-term extended here. And again, I'll cover that in the nightly video tonight when I go over to our premium subscribers, what this market looks for over the next couple days. Should we look to start to short oil? Should we look to go long oil? What about gold? What about the dollar? Where the expectations are in this market. But right away, you have to say to yourself, oil has been on quite a run in the last week or two. Notice this low pivot down here at 34. You're now nearing 39. That's almost a $5 move on the USO. That's a tremendous move any way you cut it, folks. It really is. So again, keep that in mind, folks, and just continue to monitor it, as it is a very significant feature here on the markets. Now, going back to the SPY, folks, again, keep an eye on this level, the 110.90 level. 110.90 is very significant, and again, I'll keep you guys updated. Again, I've given out some swing trades to the premium members of the Research Center. I'm going to continue to do that this afternoon, start to accumulate a few different swing trades, and I'll give it to them as they come in as well. So that, again, folks, is what we're looking at here. The market's flat to sideways to slightly higher, again, for the second straight day after the big move up. Just looking at the markets themselves, Dow is up about 50 points, NASDAQ up about 8, and S&P 500 up about 4. So you can see about a 0.5%, again, a little less than 0.5% on this market. Now, again, guys, focusing on a couple other stocks in play today. XNPT is in play today. Look at this stock. And I just figured I'd show this because it is quite a drop. But today the stock reporting some not so good news with the FDA. The FDA rejecting one of their drugs, and the stock is getting hammered down here. Look at the size of the volume compared to all the past volume days. Tremendous. Would I be a buyer? No. Would I be a seller? No. All right. Either way, I'm not a short candidate here, not a long candidate. You want to see this consolidate, and then you maybe get a little bit of an up move, maybe after 2 or 3 weeks of this kind of movement. But you want to have all the margin selling done. There's going to be a lot of margin selling on that play, and you want to get it all out of the way because that's going to be heavy, kind of keeping it down type movement. And again, you're coming into a level where it's so oversold now, it could bounce. But again, with the margin selling, most likely it'll just stay down here and be a dead play for a while. So we'll continue to focus on that, folks. I want to make sure everyone's fully aware of what we're looking at. Again, looking across the board at the SPY, let's go back to it. Spiders, again, are pulling back slightly here, but really what this would be is the start of a little bit of a pause in the markets. Economic news today, guys. The markets are up today slightly, but economic news was very, very poor. We saw jobless claims coming in at 73,000 today. That was well above estimates of about 440 to 450,000. So worse jobless claims than expected. Also, PPI, Producer Price Index, came out at 1.3%, I believe. That is extremely high, folks. That is borderline extremely, extremely high here and has to be monitored. You have to keep in mind, folks, that the PPI numbers, right now, it's not affecting the consumer, but tomorrow we're going to get the consumer numbers and find out if it is affecting the consumer. But 1.3 was extremely hot, showing maybe the start of inflation. We'll watch for the CPI numbers tomorrow. That should be a good indicator. Again, resistance on the spiders now 110.90 to 111. Let's see where things go here. Have a wonderful rest of the day. Talk to you tomorrow. Take care.